Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Monday edition. Should be a fun one today. I started just pulling up some things while I got started here a little bit late. I welcome everybody. Yeah, options merchant saying, yeah, you average more than 390 orders in a day. You are now considered a professional trader, and your fees are going to start to go up. And one of those little things you got to pay attention to. It's kind of like if you have a Series 7 or those licenses, you also are considered a professional trader, which is why I turned that down many, many years ago. Okay, I'm going to start things off just by going into the title for today, which was The Big Short Part 2. You guys may have heard about Michael Burry, who, of course, was the guy who made a ton of money off of the housing crisis in 2007, 8, and 9. The movie The Big Short was titled because of a lot of stuff that he had done. Now, today he opened I don't know if it's today or recently he opened a $1.6 billion short position on the markets using S&P and triple Q puts. Now, I looked to see exactly what his strike prices were or the duration. I could not find that information. I'm going to keep on digging for it. The bottom line is, it is a massive, massive short position for one individual. Now, you know, if you think about how many puts that is, it was $1.6 billion worth, right? So let me real quickly go over here. I'll bring up a calendar. Let me see if I can bring this up for you with a calculator. Bring up a calculator. All right, and let's bring up SPY just to put it into perspective, right? What does $1.6 billion look like? So right now, SPY trading, let's just assume he sold the 420s, right? If that's right now we're at 448. I'll just do the 420s just to give you an idea of how many shares this might be. So let's say you go 1.6 billion. There you go. That's 1.6 million. There's 1.6 billion. Divide that by 420. Divided by 420. That's 3.8 million individual shares. Divide that by 100. How many lots he's got? So he's got 3.8 million shares, which may seem like a ton to you, but guys, years ago I was in a position that was just about that big as well. It was close to that big as well. So let's divide that by 100. So he's basically bought 38,000 puts. Wow, that's a big position. We were talking with Corey Lane the other day about doing 18,000, 15,000. Yeah, Tom, that is definitely bigger than my short SPY position. I think my short SPY position was like I think it was about 1.8 million with the 420 SPY puts that I had on years ago. So he's basically doing 100x that. So yeah, surely that's a massive position. But I wanted to actually type it into chat here, and I didn't have a chance to do it before the show today. Let me do a poll here and say, is Michael Burry, is Michael Burry correct with his short? Let me go. What do you guys think? I'm just going to put that in chat and let you guys stew over that one. What do you think? Is Michael Burry correct with his short position? Is he just off his rocker to go in that big? You know, one of the things that I find interesting about influencers and people who have sway in the marketplace is their ability to influence people. That's why they call them influencers, and to manipulate people with their decisions with regards to the market. And I think many people may look at what Michael Burry has done in the past. His flagship call was that this housing market was a house of cards built off fraudulent credit ratings and credit default swaps and mortgage-backed securities and all this garbage that ultimately panned out, and he was right. So, now everyone looks at him as he's just this genius. He's so smart. He's great at what he does. But let's be honest, Michael Burry has made a ton of calls since 2008, some of which have been successful, and many of those have been colossal losses. Now, what was interesting about this one today is how many media agencies picked it up. I mean, it's pretty much all over social media. It's everywhere right now that he's doing this. And I'll tell you what, if I'm an institution, if I'm a JP Morgan, a Goldman Sachs, any of these big guys, what I might do here depends on my relationship with Michael Burry. If my relationship is that this guy is just a scumbag, I can't stand him, he drives me nuts, let's say this was my SS, right? I would collude with other people, knowing he's got this $1.6 billion position short in the markets, and I would collude with other financial firms to just buy the hell out of the market until the expiration of his options contracts to make him a net loser on that position. This is why it's so dangerous to sit there and publicly disclose your positions like that to the media or to the public, because now all of a sudden others that have more power than you do can influence and sway that market and crush you with it, which is why I usually don't like talking about my trades. The big trades I make, I generally don't share those with you, except that 420 put position. And of course, that didn't work out. I feel like they might have been watching me as well. So I'm going to go here and give the results of this poll. Only 18 votes? Come on, people. You're slacking over there. Is Michael Burry correct with his short position on the markets right now on the S&P and the NASDAQ? What do you guys think? There we go. A couple more are going to jump in here. You can't give a good evaluation survey if you only have, a few people in there. So let's get the rest of you in there. If you're listening to this right now, just take a second, go to the poll in the chat, click what you think it's going to be so I can do this one final here. What's going Chris Marcone says, here's the thing, others will talk. Question is, what position will they take? Correct. And by him saying that he's got this position, I don't trust anybody's comments or statements about the financial markets. I really think that most of it is smoke and mirrors. They're trying to get you to do something, one action or the other. So I will finalize this poll. We got up to 26 on the poll. 62% of you thinking that he was right with his short position. Others thinking no. Okay, no problem. Let me end that poll there so we can finish that saga here. Let me see, a bunch of good comments. Is his trade going to be liquid enough to exit with a profit? Most likely, yes, Margaret. Again, he's going with the two most liquid ETFs out there, right? Triple Qs and SPY. He should have plenty of liquidity. However, if he was smart, I think he would have gone with the full SPX. He would have gone with the SPOOs, gone with the full contract as opposed to going into the minis. That's kind of silly that we had done that, but he did on SPY and Triple Qs. That's his prerogative on how he executed that trade. I certainly would have gone with something with the full contract, would have saved me a little bit more money on the SPUs. So liquidity maybe was the decision why he chose SPY. Could he lie without repercussions from the SEC? I don't believe so. If he was to disclose this position, and I'm not sure whether this was released as part of his quarterly filings for his hedge fund, if he disclosed it there, he may already be out of those positions. And again, you read the headlines here. Let me bring one up here real quick. I just want to do I have it here? Oh, I don't want to waste our time bringing this bad boy up. But, you can go to all sorts of different sites and pull this article up. Here it is from thestreet.com. Let me just bring this up real quick for you guys so you can see. So what's interesting is none of them really give clarity as to what that trade was. Now, remember, if you're a mutual or a hedge fund, you do have to disclose quarterly positions. Same with mutual funds. So we'll go here and look at just what this is from thestreet.com. I'm not promoting any particular thing here, but it just says here on Monday it was revealed that Michael Burry held bearish bets against the S&P 500 and the NASDAQ with filings released on Monday to the tune of over $1 billion. Now keep in mind, this doesn't mean that he is currently short. It doesn't mean that he is currently, holding $1.6 billion. That's why I just have a hard time reading the media and understanding what they're giving you. With this announcement, what they're saying is in the past, at some point, based off the filings of his hedge fund, he did hold $1.6 billion worth of short positions on the S&P and the NASDAQ. It does not say that those trades are currently open. It does not say that he added to that position, lessened that position, whether he's profitable or not. There's a big problem. It's about misinformation. And to me, this is the media smoke and mirrors trick that we get all the time with these announcements. Not only does it not say that he's in or out of it, it doesn't say anything here about strike prices. I saw someone post in here, VB Met says strikes matter. Hell yeah, they do. He might have been in the June puts or July, and they're out already. His options could be for August, and they expire this weekend. You just never know what he's in. This is the big problem I have with this headline. But, you look at the major headlines, you get a picture like this of Michael Burry just, sliding down this slope of profit that he's just absolutely killing it out there, and that could be a total lie. We don't know. Now, if we look at the chart of SPY, certainly if he's been in it for the past couple of weeks, it's been great. But what if, this was for the last quarter? So he could have had those puts anywhere between, let's say, May and current price. I mean, I don't know where those puts were purchased at. So he may have lost his ass on that one by holding those puts as this market continued to rally, SPY getting upwards north of 460. and maybe profiting a little bit over the past couple of days, but we just don't know. Really kind of drives me nuts, guys, that we are subject to this on a regular basis. And I think you guys can see why I'm upset about it. Is that the average investor right now looks at this headline, and because it says Michael Burry makes a big bet against the markets, it sounds like right now he's short and he is absolutely just riding this thing down. And I think that may be completely wrong. It would not surprise me to see that he would actually be out of that position already. Anyway, we don't know. We'll find out next quarter. If he's still holding the same put position, then he bought long-dated puts. Great. Good for him. There was something about Burry warning about the markets in February. Could that be when the market... Exactly, Margaret. And you remember that. That was a big headline. He was saying, watch out below or something like that, or watch out. I remember that he made some comment about how he felt the markets are going to crash. And, I mean, look at the chart from February on. You know, if he's holding that short position, he got slaughtered. Exactly, Margaret. The big short part, too. The only other confirmation I need is Kramer going short. Good one, Dave. I'll talk about Kramer here in just a second. But anyway, I thought this would be interesting on multiple fronts for you. Number one, because the headlines, the way they're written, make you think. And they're designed to do so, to make you think that he is absolutely short right now. Which, when I see stuff like that, I hate to say it, I actually feel like... it's just deceptive. I feel like that the markets are going to start to rally here because now they're trying to find people to short the market, and typically markets go the opposite direction of what most people feel. So it would not surprise me to see this market rally now because this headline came out today. Even though I am somewhat bearish on the market, just even though we've got that uptrend going, we've been hitting our head against highs, a little bit of a pullback right here. Just wanted to share that one with you. Now, I can't find the tweet from Jim Cramer, because someone said, and all we need now is for Jim Cramer to say he's going long or short, and then we know which way the market's going to go the opposite direction of him. So I'm going to do I haven't done this in a while, the Jim Cramer Donkey of the Day. I think he actually has some of the most frequent Donkey of the Day awards on the TraderMerlin show, just because he's so colossally wrong. But he posted on Twitter, and I couldn't find it just now. I was digging for it. He posted this tweet about NVIDIA, basically saying it should tank, should go down, get out of it. And then NVIDIA had a huge day today. So let me bring up the chart of NVIDIA just so I can do this one for fun. Call the Donkey of the Day, NVDA. And there you have a massive pop up today, tune of about 7% for NVIDIA, which may not seem like a lot, but that's almost $30 per share for anybody who's holding it. Larry is pretty happy today, I am sure. You can also see in the after hour it's still trending up. And what was funny is, when Jim Cramer made that kind of bearish get out of NVIDIA comment, this thing started rallying. And today he went on TV and he's like backpedaling. Oh, I didn't mean that. I mean, you should own and hold on to NVIDIA. You shouldn't be day trading it. You shouldn't be short-term trading it. So just buy and hold NVIDIA. It was a nice backpedal and, try to save face. But Jim, you're a donkey. Repeated Donkey of the Day. You should wear a little pendant. Your necklace should have a little mule on it, so we could call you that. You jackass. It's pretty funny. Exactly. Margaret quoted what he said today. He said, let's be clear. I think that NVIDIA should be owned and not traded. Owned. I'm tired of being, I like he says hectored. How about heckled? By people who say I hurt them in NVIDIA. That's ridiculous. Own it. Don't trade it. Yet earlier, he made comments that were very bearish on NVIDIA, saying you should not be in it. It's like, well, make up your mind, dude. Make your mind. And nice for him to backpedal and recover, but he still gets the Donkey of the Day for me. I can't tolerate it, even though I do follow him on Twitter just so I can see the ridiculousness of his tweets. Barchart as well does a great job of posting his tweets with the charts right after he tweets out something. So if you want entertainment, follow Barchart. It's it's so funny to watch. He'll be like, I think this company is going to the moon, and it drops 20% the next day. I'm surprised he didn't make some bullish comments on AMC this morning. If you guys saw AMC, which I've been pretty rough on over the years from an investment perspective, down 35% today. I almost sold puts today. I know it's crazy. In my gamble account, I had some equity free, and I was like, you know what? I'll sell puts on AMC because people are just freaking out on this thing, and I don't think it's going to go bankrupt, but I didn't pull the trigger. Just got a little bit too nervous on that one. All right, let's run through our top 7 of what happened in the marketplace today. Start things off at the bottom with crude oil. Now, I was anticipating a pullback as we came into this yellow box, and we had it for one day, and that was on the 8th of August. Since then, it's ripped back up, shot back through those highs, and now coming back down. So I don't know where crude oil is going. Of course, it didn't even follow what I thought it was going to do initially. I thought it was going to respect that overhead supply, but it did not. So right now, technically, I don't have a clue. It looks like just a pullback here and kind of sitting within that what was an overhead supply zone. Now I could probably remove these lines. I'm going to leave them there just because price is in that channel right now, but ultimately there's no value to that yellow box I've drawn between 82.42 and 83.61, down 0.82% on the day. Yeah, most likely there'll be a reverse split in AMC. Most likely you're going to see a reverse split in Nikola as well, which I'll talk about here in just a second. I am feeling a bit bullish on gold and silver for the remainder of the week. As you guys know, I actually added more to my position today. I put more 2150 puts on expiring Friday, so getting a good amount of premium. Actually, it was about 0.5%. I think actually over 0.5% rate of return just for the 2150s expiring this coming Friday. So on SLV, but you can see on gold, you've got this nice sell-off. It started to slow down a little bit at the tail end of last week, and then today you have a hammer formation, which is not really into a strong demand zone or anything like that, but I do like this formation on gold. Gold is down 0.13% on the day. Here's SLV. A similar picture, even though it's down near the lower end of this range at 20. Oh, sorry. So it wasn't 2150s, it was 2050s. Sorry, because I wanted to do it just below the current price. When I did today, it was at 2073. So the 2050s was the puts that I sold expiring Friday. Excuse me for my correction. I do have 2150s. I have the 21s, and I also now have a good amount of 2050s expiring Friday. So we'll see if this reverses here. Ultimately, in a perfect world, we'll get to 2151 by Friday, and all my puts will expire worthless. I'll keep my long position. My call is at $24 strike, so my call will not be taking away any of my silver position this week unless a miracle happens. Moving on to Bitcoin. So kind of a surprise today. I did not believe that the SEC could postpone the announcement. I was under the impression that the SEC had to make a definitive announcement, either reject the spot Bitcoin ETF that BlackRock had proposed and others. Either you have to accept it or you have to reject it, and it sounds like it just got postponed. So, Merlin, do you ever sell in the money puts on silver? No, not for any particular reason, but I don't. I obviously I could have gotten much better premium for that, but the way it's looking right now, don't feel super confident we're gonna have a big rally. Although I do think a slow drift up. But nah, I just did the 2150s because I have a pretty big position in silver right now. I've got thousands of shares of SLV that I have calls against, but I've also got a bunch of puts that if I get exercised, fine. I don't necessarily want them because my position size in silver is already too big. Not too big. Let me take that back. My position size in silver is already large enough. But if I get more to it, that's fine. So that's why I'm going out of the money. If I really wanted them, I do in the money, collect some better premium with the thought it was going to move on up. But no, typically I don't, Lisa. Let me see. I missed a whole bunch of comments here. Let me scroll back through here. There's something about Burry. Yeah. Dealer confirmation. Ace Kramer. And Margaret, same thing though. She says, I prefer Warren Buffett's portfolio advice. While I would agree 100%, if I had to choose between Warren Buffett or Michael Burry, there's no question. Warren Buffett is where you go for your advice. But remember, he's under the same thing. Berkshire Hathaway does not have to disclose their holdings right now. They have to disclose it when it gets to a specific point in time, and there are specific filings they must make with the SEC, with regulatory agencies, as not necessarily just the SEC, but those filings are viewable on Edgar. You can go download those documents. Edgar's a transparent database of all these filings for you guys. But remember, that's old information. It's lagging, and what you see in those quarterly filings they may not have those positions anymore. They may be out altogether, and they may be building new positions. One thing that I've learned over the years, if you see somebody say on media right now, I am buying something, that means that they probably already bought it, right? Warren Buffett did that with silver years ago, where he had accumulated a massive amount of silver and he didn't say a word. And then one day on TV, he said, yes, I have a position in silver. And silver went gangbusters, and all of a sudden he can sell out of his position for a great profit. So just anytime you guys read a headline, media story, whatever, from anybody, just assume that they are holding that position they're telling you to buy. They're already in it, and they're using you as the exit point, right? You're creating that volume to push markets up so they can sell into. And same thing, when you see downgrades and bad news about specific stocks and companies, they may already be accumulating, but they need you to push price down further so they can buy even cheaper. Yeah, you're right. So it wasn't Coinbase. It was kind of disclosed, Margaret, that Donald Trump apparently has around $500,000 worth of cryptocurrency. That's good to know. But, let's be honest. Do you think he really cares about crypto? I don't think Donald Trump cares about anything other than can he make money with it. So the fact that he has crypto to me doesn't necessarily mean that he believes in the fate of crypto. But what it does lead me to believe is that if by some miracle he gets put back into the presidency, he would probably have much more accommodative stances on crypto because he already owns a bunch of it, and that would push his portfolio up. So there you go. Yeah, he does apparently has a big position. All right, moving up my list, I went to Bitcoin. So I was really kind of surprised to see Bitcoin did nothing today. I really was anticipating this thing having a big market rally. Article I wrote for Bar Chart, apparently not coming home to roost. I said it could get to 45,000 by April 13th, which is, well, it's actually the 14th today, right? The 14th. So you can get there by April 14th, and lo and behold, I don't think I could have been more incorrect. It's actually dropped down a little bit. I think we were like 31,000 or 30,000 when I wrote that article. Didn't quite happen. Hopefully it will move to the upside. Yes, he has ETH. I believe there's some other in there as well, but I think he owns majority of that is going to be in Ethereum. Moving up to the Russell 2000, which is down 0.16% on the day. On Friday, we had that little spinning top formation, indecision. Today, you guys have a nice, big, juicy hammer formation. I will put a line right across the high of today. Today's high for the Russell was 1939. So if we get above that tomorrow, if we open up here and then rally above that, that might give you a nice little positive rally up. And just set your rules there and make sure you wait for confirmation on that one and don't just jump into it blindly. Number 4, our 10-year. Continuing to move up. I still think that 433 mark is in play. We just broke the high that we achieved back on August 3rd and August 4th. We're right now sitting at 4.2. This is certainly having an impact on the long-term lending rates. And again, misinformation is abound out there, everybody. I saw someone, it's crazy how much misinformation or slightly distorted information can tweak your opinion. So someone posted on Twitter today, he's kind of a popular crypto guy. He says, 30-year fixed rate mortgage is above 8% now for the first time in 23 years. It's like, no, it's not. If you have a 700 credit score, it just breached 8% today. But if you're 800 credit score, which is where you should be if you're buying a home, right? If you're buying a home, you should be very good with your credit. If you have a 700 credit score, that means that there's been some problems with you and your money management in the past. So I personally think if you have a 700 credit score, you probably shouldn't be buying a home until you square up all your financial needs. Granted, things happen. I understand that. But I think, buying a home is one of those things, you put so much money into it. If you're not financially responsible, and clearly a 700 credit score means that you have had some issues with your credit in the past, you could potentially lose your home. So why would you put yourself in that situation? So I moved that bar up to 800, which is where y'all should be. Work on it, make it a goal. And the rate is 7.4% for that 30-year fixed rate mortgage. Regardless, still pretty high up there. And I believe that what we're seeing is about a 3% markup on the 10-year yield. Will get you your 30-year fixed rate. So again, if this continues on up here, which it looks like it's going to, you want to be going short things like TLT, which is the inverse of this chart. Looks to me like we're going to be going higher, and I think that those mortgage rates are going to be going higher as well. Merlin, I believe we are in August, not April. Did I say something? I'm not sure what I missed on that one. I may have misspoken. And you should be South Dakota, West Virginia, for example. All right, I'm lost on the context there, but let me know what I missed there, and I'll fix it. Here's your dollar index. Coin Bureau is good. Here's real good. Yeah, he's really good. Great guy. All right, so let's look at this dollar index right now. One of the things to notice about the dollar index is where we are currently in. Now, we've had a 3-day run that's been absolutely fantastic which is just vaulted up to right around 103.50. We're currently sitting at 103.15. But if I were to draw a loose area of supply around it, just as for entertainment purposes, something like that, notice we went right in the middle of that zone. Go higher up just a little bit to fit this little wick that's right there. There. Okay. So your zone for this dollar index is between 103.11 and 103.57, and there we are right now at the very bottom end of it. It does feel like this would start to have a little bit of a pullback from here. Now, we are, again, going against the trend. Things look really strong right now. If this does start to pull back, that should give you a nice little catalyst for the bullish market move here, which would mean that Michael Burry in that unknown position that he currently holds for 1.6, or that he may hold for $1.6 billion, could get smoked if this thing starts to rip to the upside for our equity indexes. So keep around that dollar index. It does look like you're going to start to see a little bit of a pullback here. We were much higher on today's session and then gave back a lot of those gains into supply. Let's see if that continues a little bit of a pullback here over the coming days. S&P 500 was your second place finisher with a tiny little green candle coming out the heels of that little hammer formation. And again, I had little line drawn on Friday's session saying, hey, let's see what happens on Monday. And lo and behold, we got follow through today. Right, that red line was at 44.96, and I said, hey, if you get above 4,500, there's your long entry, and there you are for your long entry. Now, I did not buy long on the S&P today. I still have, do I have SPY puts? No, I don't have anything in the SPY right now. But there you got your little trigger to buy for the long term, at least for a swing trade here, back up to probably 45.40, and then maybe challenge those highs again. That was the S&P. Here's the NASDAQ, which is your best performer on the day. An about face for what we saw on Friday's action, even though it went down to that area of demand. Pierced it twice. Pierced it on Friday, pierced it today, and then all of a sudden today we ripped to the upside. 1.16% gain as we stand right now, looking pretty good. Who knows how far that correction or pop will be, but that's what we got. Now, you mentioned a bar chart article predicting 45,000. Oh, yeah, it was April. Sorry. Thank you for the clarification, Liz. Yeah, yep, and I was wrong on that one. It happens. Wrong on a lot of stuff. Wrong on a lot of stuff, but right on a bunch of stuff as well. Again, I'm holding that I'm holding my Bitcoin for the long haul, so I really don't care. I think we'll hit 45,000 regardless over time. It's the other more active trades that I'm in that are important to me. When I have the shorter term swings going on, that's where it becomes very relevant. The JP Morgan, the Bank of America, the Charles Schwab, or some of the other ones. Oh, the Anheuser-Busch. By the way, Fortinet should be a nice winner. I think Big Eb, if you're here, you'll probably see that thing expire worthless. FTNT. Right, I know you sold some puts on that one. We had a little bit of slight down day today, but I feel very comfortable. I believe mine was the 55 strikes, which is right down here at the low, so I'm not concerned at all. I collected $1.05 premium on that bad boy, so I got about 2% for less than 2 weeks rate of return. We'll see what happens here by Friday. Biggest position I have right now, as I mentioned, is SLV. I do have Tesla puts, TSLA. I have Tesla puts right now, and I have the 235s, I believe. So the 230s or 235s. Well, that was weird. So Elon Musk came in. You guys all see that on the screen? That was pretty crazy. Let me go to a different symbol and type that in again, see if that does it again. That was really funny. I don't know if you guys caught that at the bottom of the screen. Huh. There was a picture of Elon Musk on the Joe Rogan show smoking a joint. Just came on the side, came on top of the screen here. Maybe I'm the one who's losing it today. That was pretty weird. I'm gonna watch the recording of that just to see if that really did just happen. Anyway, okay, so you guys did see that. Okay, I was like, what the heck? That was so bizarre. I've never seen that on TradingView, but that was pretty cool. I don't know. I didn't do it. That was bar chart or TradingView. Pretty cool. As long as it's not just me. I was for a second, I'm like, man, I'm having a flashback to my younger days. Anyway, I think I'm in the 235, or actually I can tell you. Let me just look at the percentage from down move today. Here we are there. If I go snap mode off and go to 230. Yeah, I'm in the 230s. And I have 230s expiring this Friday, so most of my stuff expires on Friday. I've got a lot of, I think I have like nine put positions that are expiring on Friday. We'll see how that all pans out. But this is another one that I'm in. And Fortinet, I didn't do anything with Anheuser-Busch. You guys know I'm definitely long-term bullish on Anheuser-Busch, and I thought about selling some more puts on it, but just kind of passed on that one because the premium got really kind of blown out of it. All right, so that's your top 7. Other things that might be noteworthy, let me just scroll down here and show you your yield curve. This is the 10 and the 1. The good news for those that are looking for markets to get back to some normal direction and maybe a soft landing, the way we're going to get a soft landing is if this slowly starts to increase and gets back above that green line, which says 0 on it. Right now, we're nowhere close. You got about 1.17 differential between the 1-year and the 10-year bond. The 10 and the 2, which is what most of the industry looks at, is still about 0.77. Kind of crazy. Oh, yeah, U.S. steel was off charts today. Monster move up in U.S. steel. You had a 36% gain. This is one of those ones I regret. If I look back on the weekly, this was a huge trade that I made years ago. Couldn't have been that far back. I can't even tell you when this was. I thought it was back here in... I don't even remember. I got so many trades in my head. I lost track of them. Yeah, but U.S. Steel had a pretty big week here today, or a pretty big day today. I didn't look into what it was and why it was, but just a giant move up for U.S. Steel. Good for them. I like it. Yeah, Elon was high. I am definitely not. I am hydrated because of the weekend. So let me go into a couple listener questions. I had one that I really wanted to get to, and I think this kind of piggybacked on the Friday show. By the way, John O'Donnell will be on tomorrow. We're going to be talking about shitcoins or altcoins. I don't think I can type in Google search and make my title. I can't have the word S-H-I-T in there, so I'm going to have to be creative in the way I do that. We're going to talk about altcoins and shitcoins and what John's thoughts are on that. It was one of his favorite topics. But on Friday's show, we talked about innovations and things that have happened in your lifetime that have been so groundbreaking that if you look back and said, man, if I just got in that early on, I could be a gajillionaire at this point. So Michael sent in a good question. He said, could AI be the next phenomenon like Bitcoin or vape juice? How best to capture these potential gains? Could this really be something to turn us all into millionaires? Well, the answer is no. It's not something that can turn all of us into millionaires. It will turn some of us into millionaires. And hopefully those that who positioned correctly will capitalize on it. I think the majority of the population will not capitalize on it, and I actually think that this is the debatable point right here. I think that the vast majority of the people are more likely to be hurt by AI than benefit from AI. So you and I will have certain things that we love about AI. Certain things we use. I mean, I showed you guys some of the little basic features of ChatGPT you guys see on Midjourney every day. Those are things that I could hire a graphic designer and have them every day draw me a picture for the show, but that would cost me so much money. Instead, I use AI to generate that stuff. I could create shopping lists or workout routines or give me directions on how to make a mojito or whatever I need. I can get from ChatGPT, right? That's AI improving my way of life, but I don't necessarily capitalize on what I'm doing there with ChatGPT from a monetary perspective. All my articles that I've written, all of that 100% is created from my brain. I do not use ChatGPT for any of that, even though some of the articles I've read recently, clearly people writing ChatGPT articles, which is cheating in my mind. As I mentioned, I think the majority of people will be hurt, and here's how I think that's going to happen. As I'm learning more about AI and its potential, there are some really interesting dynamics that are going to happen in the workplace. And I think that what will happen is a lot of traditional jobs that you and I are familiar with will be displaced. And I think that AI is going to create such job displacement that, historically when we have a new technology come through and we go from whatever horse and buggy to a car, it displaced most people that did work with horses, but they just moved into the automotive industry and, it was a new shift. With AI, where are you going to go? Right? So if you're a copywriter, if you're someone who's in database management, if you're someone who's in HR, your job may be replaced by AI, a program that's designed to do what you do on a daily basis with all that data input from your job experience gets put in the computer and it now runs it. Now, let's say you had an HR department with 20 people in it. Well, now there may need to be 2. One to do the hiring and firing, one to make sure that the programming is up to date and there's no glitches in the system. I mean, that's like, you could whittle it down. So where do those other 18 people go? You could have surgeons and doctors who spend most of their lives learning and getting these degrees and making sure that they have, all the licenses and everything to perform surgeries. Then along comes a company like Intuitive Surgical, ISRG, and now they're making robot doctors, which are extremely precise. Now, granted, you probably have to have a doctor there to make sure the operation goes correctly, but no longer do you have to worry about your doctor, having a couple too many cocktails with his buddy on the golf course on Sunday, and you're the first operation on Monday morning. Oh, shaky Tom coming in there trying to do an open heart surgery. None of that would happen. So there's improvements for us there, but I think some of those doctors are going to start to get replaced because you won't need as many. They won't be as tired. They're literally going to come in and just watch this robot do work and go away. I think a lot of those jobs are going to get displaced, and then where do they go? So to answer your questions, are going to make a lot of us millionaires? No. I think the contrary, I think it may actually cause some pain. However, if you see it coming, or you can utilize AI to benefit your job, to make improvements, to make your job more efficient, great. I think on the grand scheme of things, though, businesses, which is where all the policies are being made and all the laws are being written, is because of lobbyists by corporations. Corporations like Apple and Intel and Cisco and Microsoft and McDonald's are going to incorporate AI into their business models because they want to get rid of physical workers. Physical workers can be lazy. Physical workers can have altercations. Physical workers can claim racism or religion stereotypes. Physical workers can only work so many days. Physical workers, have to take vacations. Computers work 24 hours a day, 365, 7 days a week. Doesn't matter. So you're going to get companies pushing more towards AI than human labor. It's much cheaper, much more efficient, less margin for error, less legal problems. And I think down the road, that's going to be problematic. So not to sound negative Nancy over here, but let's look at the positive side. So Michael's question is it something that's going to be like Bitcoin or vape juice? Well, look, I don't think vape juice is necessarily good, although I'd much rather smell someone's pineapple guava flavored vape pen than a Marlboro Red blasting in my face at a blackjack table. I love the fact that my clothes don't reek of cigarette smoke when I come back from Vegas anymore. But vape juice, is it good? Well, maybe we need to worry about the addiction issue. That's another problem with vape juice. Is there opportunity? I think the answer is a resounding yes. But the question also is have we jumped on a hysteria now? If I go back to the biggest one of my generation, which is the dot-com bubble, and I look back at things like Cisco Systems and Microsoft and Amazon and eBay from back in the late 90s, those ones went through the roof. I mean, Amazon, see if I can bring up a chart of Amazon going back into 2000, right? It's AMZN. Let me go on I might need to do a monthly here to go that far back. And we're just going to zoom in. So this is where we are today. You got to love the split adjusted. By the way, since its IPO back in 1997, it's up 177,000%. An argument just to hold on. So, look at this chart right here. I'm going to just put this right there. This is the dot-com bubble itself. So split adjusted, just so you guys know, split adjusted. Amazon was never down here at this price of 12 cents. That's split adjusted. It's done a 20-for-1 split, a 2-for-1 split, a 3-for-1 split, and another 2-for-1 split. So it's split adjusted. But let's say you held it here or you were watching it and you thought, I'll buy it at $1. And then all of a sudden, 2 months later, it's doubled in price. And 3 months later, it's doubled in price again. And it jumps all the way to $5.50. And you're like, this is the dot-com bubble. This is great. I'm going to buy into it. I think there's great potential for dot-com. And I started to think that in the late 2000s. Fortunately, I didn't load the boat because look what happened. Amazon had a pretty significant fall from $5.50 down to $2, back to $5.50, and then all the way down to 26 cents. I believe we're going to start to get something like this. I think you're going to have these big AI companies surges. And then the reality is they're not what they said they're going to do yet. They want to do all these things, but they may not be all cracked up and delivering on their promises, as a lot of dot-com companies experience. And then you get that great buying opportunity in a year or two. I think that's where we're at. I think right now with things like ChatGPT or publicly traded companies like Intuitive Surgical, you could look at NVIDIA, Palantir, right? Palantir in their conference was like, we're looking to get into AI in that aspect, but we're not as deep in it as everybody is claiming us to be. So I think that we're overvalued in some of the AI stuff right now. I think the pullback will create some great buying opportunities. What I would recommend is doing a similar thing that I'm going to talk about on Thursday with anybody who wants to sign up. I'm doing a portfolio construction course for crypto. Now, I have it as part of our materials for the focus course, but I'm kind of doing a short, there we go, C3. Yep, C3 is another one. And I'll bring up some of those. Here's C3. Is it just, it's not C3, the ticker symbol, is it? The ticker symbol is AI, I think. Yeah, C3 AI. There you go. Let's just look at the week, go to the daily here, because this one's brand new. Right? Actually, on the grand scheme of things, it looks like it's a great buying opportunity relative to where its IPO price was. Right? IPO'd here on its first day of official trading, opened up at $99.48. So right now you could buy it at a 60% discount to its initial offering price. And great. Fine, this may be something for the long haul, but I would certainly encourage you to build a diverse portfolio of or of AI companies, just so you don't get burned. One of the examples I'm going to explain in the Thursday session, which you guys are all welcome to join. It's free, by the way. Let me bring that one up for you. I'll post the link here in the chat again for those who would like to join. Out of the portfolio that I built, and it's a hypothetical portfolio, for the .com bubble, the majority of those failed. The vast majority. However, you're going to get some diamonds in the rough. You're going to get some that just keep surging and surging and surging and surging and surging. And those are the ones that I'm really hoping I can have in my portfolio when all the dust ultimately settles. So let me see. Why don't I not see on the Trading Academy? Oh, here we go. So 1 hour can change the way you think about crypto. You can register here. I'll put it in the link. This is going to be Thursday at 4 p.m. Pacific time. So if you guys are bored, you're around, you guys watch this program regularly, so you're going to know a lot of what I'm going to cover. But hey, it might be fun just to have you there as well. I've done well in selling puts on AI too. Good. You, Lauren. Nice. I wish you got Amazon back then. Shakes my head. Don't we all, Oliver? But here's the reality. Okay, and this is what I'm being this is like psychology for me. I'm at the therapist right now talking about this stuff, right? And I want you guys to in chat as I go through this, let me know what you would have done as well. So we go back to 2017, and I got this picture of what's his name? Jeff Bezos. 1 second as I bring it up. I'll bring up his picture from 1998 so you guys can see this picture of what this little goober looked like in his office, right? Here is a picture. Real quick, let me just bring it up here. Mind you, they went public, $18 per share in 2017. They were selling books. They almost did exclusively books, right? Okay, great. At that time, I didn't really care. I got Books A Million. I got Barnes & Nobles. I got all these different bookstores. So flooded market and, books. And then I see this picture. So here's Jeff Bezos in his little office with a hand-painted graffiti-looking Amazon sign. Would you buy shares of this company? I'm willing. Be honest. Would you guys buy shares of this company if you saw? Oh, I wonder if I can get this bigger. See if I can make it bigger. Would anybody here buy that company? You want to buy that stock, trading at 10, 20, 30, 40 bucks, whatever. Now, all of you would lie and say, absolutely I would, because you know what you know today. Putting yourself back in 1998, right? At least with caps. No, I wouldn't. Hell no. I would laugh at you. I'd be like, dude, you're an idiot. Why would you buy that? No. Here's the thing. When you look at that 177,000% rate of return that Amazon has had since its IPO price, I don't think that there is anybody who is still holding it today from the IPO price. Anybody. I just don't see it. I don't think anybody is still holding this. I'd love to know. If they did, maybe they lost their private key or something. I don't know. Now Bezos, oh yeah. Not only is he on steroids, the dude's ripped. He looks better now than he ever has. He's jacked. He's, when you got that much money, I probably would be, I don't think I would be doing steroids, but I would certainly have a personal trainer. I'd probably be a pretty cut-looking dude, like Zuckerberg's starting to do right now. Maybe someday Elon Musk will start to lose some weight and get all ripped as well. So what I'm getting at here is, even if you thought this was a great company back here in 2000 or 98, were you going to hold it from $5.50 all the way down to 30 cents, 20 cents? Probably not. And then hold it as it rallied all the way up to these umpteen thousands of dollars, split adjusted? Probably not. Good point, Sly Dog. Good point. Except Bezos, right? So Bezos and probably some of the initial investors are still holding those shares. That would be, yeah, you're right. So there is somebody. It sure as hell ain't going to be me, because I don't have that patience to hold something for 97 they did an IPO. What you're talking 26 years? I'm not holding for 26 years. Now, I learned that lesson. And by the way, there's Amazon. Let's look at eBay. This is another great one. All right, you go back to their IPO. They IPO'd at 18 bucks a share as well. And, they hit a high of 80 bucks here, split adjusted. And they did multiple splits as well. So my point is, I did not have the patience back then to hold that long. Now, what I've done with crypto is all that money, I don't care what happens to it. I am not going to make that same mistake twice. With crypto, I'm going to hold this for at least a decade. Actually, I'd be lying if I said that. I would say I was going to hold it for at least a decade. I plan on selling all of it in November of 2025. I'm selling all of my crypto, 100% of it, and I'm going to buy it all back and more the year following because of this 4-year cycle. But I do believe you're going to see it become more and more accepted and grow more and more and more and more. So I'm holding Amazon at adjusted price. Awesome, Lisa. Phenomenal. That's hats off to you. But the tax liability on you is going to be pretty tough when that one comes due, right? But congratulations. That's pretty awesome. It's almost like a set and forget play. Correct. And the reason I bring this up is I'm not going to make that same mistake with crypto because I think that this is such a revolutionary thing. I've got a big portfolio. I'm letting it go. I'm already well rewarded, but I think it's barely even scratching the surface of the overall reward. If I look at Bitcoin in comparison with Amazon, I would say that we're somewhere back in what Amazon was doing in 2004, 2006. I don't even think we've seen the big mass adoption for crypto yet. So I'm ready. With AI, to Michael's question here, I would argue that you're further out than that, right? You really have to be selective about what you buy in. What we're witnessing now is on a lot of these conference calls or earnings statements, everyone's putting AI in the conference calls because it's going to get picked up by the Associated Press. So the more time you put AI or artificial intelligence into your conference call and releases, the more you get picked up, the more eyeballs come to your company, the more people buy your shares. So be careful what you're buying into. Most likely, if you built a portfolio today with 20 different AI companies, fast forward 10 years, you might have 2 or 3 that are still standing. And therefore, you got to balance it out and say, is it worth the risk to me to take today to spend, let's say you said 20 positions and I put $1,000 in each one. That's 20 grand. In theory, some of those are going to strike it big. Most will probably fail. But in 10 years or so, maybe that portfolio becomes $50 or $80 or $100,000. Now it is a question of, does the average annual compounded growth rate of that $20,000 make sense to hold it that long? It's a tough one to figure out, but I think that when you see these innovative technologies, you do kind of have to build a portfolio, know you're in it for the long haul, and just ride it out. That was great back in those days. Stock was great back when stocks were inexpensive and they would often split. Yeah, you don't see too many splits now. I mean, Microsoft was the crazy one with regards to splits. And for those of you who, if you like to research this stuff more, you go to here like Amazon. It doesn't show you on the monthly. It shows you on the daily. So for those who are looking for splits, you can find sites that will give you the whole list of them. But if you scroll back, you see these little orange or gold S's. That's where it splits. And you can see back here in 2022, they did a 20-for-1 split. Man, if you had shares, which Lisa did, you were loving this. Now, unfortunately, it dipped down from that point. But now, if Lisa had shares that were averaging 102, well, now she's got 20 more of them, and they're averaging 140. Awesome. How soon would an AI? Oh, good question, John. Soon. If it's not there already, I'll bet you within the next couple of months, you're going to have an AI ETF. Without question. There is no doubt in my mind it will be there. There's going to be multiple. BlackRock will probably be first to market, or be Van Eck, or Wisdom Tree will probably try to do that as well. So one of those firms, it's probably already filed an application and just waiting for review and acceptance. And remember, all they're doing is just putting together a little portfolio of all the AI stocks, which, again, is probably the best bet for you if you don't want to do the research and dig into all those numbers. All right, show went way longer than I wanted to today. Was really trying to cut it down to a 30-minute show, as you guys know. Here's what we've got cooking for tomorrow. I'm going to scroll down here because not much happened on our Monday Economic Calendar, but we start to get some more big headline stuff tomorrow. For the U.S. markets, you guys can see we have retail sales, Empire State Manufacturing Index. That is going to be coming out at 5:30 in the morning Pacific. That's 1 hour before the markets open. Later on that trading day, 30 minutes into the session, you have housing market index numbers. You also have business inventories. You've got some Fed members speaking, TIC long-term purchases. So there is a lot of really important news coming out for the U.S. And those trading the Canadian dollar, you also have some inflationary data coming out for Canada, and I'll bring up the Canadian dollar here just so we can take a peek at what's been going on there. Been pretty weak over the past month, but all in all, overall, it's been actually trending to the upside. This, again, is the inverse. This is the U.S. dollar against the Canadian dollar. Therefore, when you see the U.S. dollar falling like this, it means the Canadian dollar has been around. All right. Thank you guys so much. I'm going to wrap it up here. Tomorrow, we are going to have John O'Donnell, the ambassador of opportunity, on the program, talking about altcoins and kind of his view on shit coins, if you will. That's the term in the industry. Not trying to be rude or crass. That's just the term for them. Again, there's 4 different types of coins that you can talk about. Bitcoin is the coin. Anything other than Bitcoin is an altcoin. Shit coins are coins that serve no purpose and are just scams. And then you have meme coins, which are literally just a joke. But anyway, that will be the plan for tomorrow. If you guys have anything you want me to ask John, send them on into TraderMerlin@gmail.com or put them down below any of the YouTube videos, and I will get to that. Liz says the AI ETFs already exist. I knew they would. If they're not there yet, they're already in planning. I'll bring up those tomorrow. I'll run through tonight and get you some AI ETFs. Awesome. Thank you, Liz, for that. You guys have a fantastic remainder of your day. I will see you tomorrow with John O'Donnell, on the Trader Merlin Show. Take care, everybody.